In terms of growth, where does the variance of sell side estimates fall out? Nobody has said put a number of 10% on the paper, although I'm sure it's been talked about. The mean growth rate amongst the group is 17%. We're right there, although the variance is a plus or minus 2, and I think that the risk is actually to the upside come Investor Day on Thursday. So what does this mean for the stock, where we are today at $90? Are we going to see an inflection point here as things stabilize, or at least the story on the margin gets a little bit better, less worse? 2016 has been a tough year, a lot of employee turnover, a lot of bookings slowing pretty substantially, especially in Q3. So we'll see what happens. I do think that if you just see a marginal improvement, that you can get to a stock 120 to 130 in pretty short order, especially as we start to trade off of 2018 estimates and then 2019 estimates as we roll into the 2017 calendar year.
First one, what's your downside from here?
What's the downside from here? The downside is that we're totally wrong. Probably worst case scenario, like they come out, and I think in relative to our work we've done, like worst case scenario would be like 15, 14%. I don't think 10%'s in play. I really don't, because you have to think about like the way that the revenue model works and the implementation, the backlog. If they book an enterprise deal today, right? So let's take Adventus, for example. If they book Adventus in Q4, that entire annualized bookings value goes into the bookings number. They start implementing those docs halfway through this year, right? They still have more to go in 17. They're not going to reach their full revenue potential probably until 2018, 2019. So, I think there's a lot to support the growth. So if they come in and got at 15%, and there's some sort of like come to Jesus moment, like capitulation, say, guys, there's no way we're ever going to be able to grow 30% anymore. This is the deal. I mean, and we don't get an enterprise deal. Yeah, I could see where it can get down to 70, 75. But again, the whole point here is that I think that they can hit numbers, even though and possibly even beat numbers, even though the outlook for inventory is pretty bad.
Yep.
And on the margin, if they just come out and sign a big enterprise deal, there's a lot of potential upside to what we're baking in here, which I think is very conservative, which means that I think the risk reward is pretty favorable